good day all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Halloween, the 31st of October, 2022, just after 6 p.m. Central Time. I go into what I call my quiet trading period now. And the reason is that no matter how I look at the chart action, you can get a big shift on it with what the Fed does or doesn't do come this Wednesday when we get the FOMC meeting. It begins actually tomorrow, ends on Wednesday with the announcement, then the press conference. And then we get, I think, an even more important meeting, at least this time around, the jobs data, jobs report as we'll call it, on Friday. No matter what the Fed says, they don't have the data yet in hand to prove that employment is falling and CPI is falling back. What we do have is we're seeing businesses slowing down. We're seeing that in the Chicago numbers today, Dallas numbers. You're seeing consumer confidence slip a little bit. I read a report that I write about in tonight's written updates for my paid subscribers, and I'll share this with you. 49% of the restaurants that are in this association, and there's thousands of them, are in arrears on their rent. That's not good. How can you hire people if you're in arrears? You could be out of business at any point. So a big problem there. 37% of small businesses in America are in arrears in rent. That's up 7%. It was 30% last month. Now it's 37%. So something is slowing down and hurting things. And how far can we go with that before we see it turn into people don't get employed and prices fall? So we know the Fed is going to win this battle. The question is at what phase? It is not a question they don't win. They are going to win. How much pain is there? Have we seen the lows in the stock market? Do we have to retest these lows? These are all the big questions that we have to ask ourselves, and we don't have answers to them just yet. Now, I want to stay with Freeport just a bit here, and I'll finish it up before I get, in fact, up until I get back in Chicago. When I get back in Chicago, and you'll see me on these screens, hopefully starting Thursday. And I'm in beautiful California in a forest called the Six River Forest. If you want to look it up on a map, I'm telling you, it's something to see. But you are in the middle of nowhere. When I tell you nowhere, the closest nice town to go have a dinner is an hour and a half away. So you're in the middle of nowhere. And by the way, there is no straight stretch of road. Everything's a turn every 50 yards. It's crazy. All right. But in looking at the market, China has gone back into lockdown mode. And as long as they're in lockdown mode, it's hard to be overly bullish copper until they come out of it. Already Apple's contingency plans are coming on Foxconn because workers are running from the plants. They don't want to keep going into these lockdowns. I understand it's just like slavery. You can't survive in that. It's terrible. So you're seeing people run from that. But it's not in just any one city. It's now spreading throughout the country, and their policy zero tolerance. So you're getting beaten up there. You're coming down a little bit through here, as you can see. I don't know how that slipped on me, but it did. And you can see that you have a pattern here on the chart of higher lows, higher highs. Let's see if this next one came out better. It did, but not the way that I wanted. Again, I have such a terrible connection here. Getting this done is a trick. I'm on a Starlink, and I want to tell you what Musk did is phenomenal. I'm on a Starlink system. I can't get everything uploaded I want, but I can get most of it. Higher lows, higher highs, certainly working at that point. And when we come over here for the chart action, you could see that you got up to the Bollinger Band a couple of times. You've been coming down and testing, and here's what I like. You're about to get a bullish crossover, where right now you've got the 18 and the 100-day averages together, but I think you're going to get them to cross over. That's a friendly sign, not a bearish sign for this chart. Last, you're overbought. So the overbought condition is you got up to the Bollinger Band and you fell back and you kept coming up and testing it. And you can see from here to here. Well, these have been the battlegrounds. And I could make an argument for the market to pull back there and try to test what it's got. Meta hasn't let go. Is it getting overdone? Of course it's getting overdone. I mean, it's just a monster break. The stock is going from just recently 135 now back to 93. That's a $40 drop. So the bottom has fallen out of it. Okay. What can you say other than okay? Apple is fighting a battle It's the best of the techs. Can it survive, though, all the liquidation going on? It probably can on this chart. It can afford a pullback here. It's overbought. It's certainly not a buy, in my opinion at least, into a Bollinger Band and 200-day average of closes and 100. No, it's an area to liquidate and get money to buy other things. Disney, look at this is important. This market's putting out a bullish signal. It's embedding. Now, for those of you that understand embedding with Bollinger Bands and have taken my course, you know the bullishness of this. But here's day 1, 2, 3. Notice all the numbers in the slow stochastics are staying over the 80 level. So this market is ending up getting bought right here and pitched out against the upper Bollinger Band. And that game will go on for a little bit until there's a reason for it not to go on. But the chart is friendly. It came alive, if you'll recall, when Netflix had the big jump, and all the streaming companies said, hey, if they can get subscribers, we can get subscribers. When you look at XLF, the financial services, it's hard to beat anything but friendly. If interest rates are going up, the spreads between what you lend, and for the bank's example, what you take in and what you pay out and what you then lend out, you're making a big spread on the money in theory. Where it falls apart is if the recession gets so bad that nobody wants the money. We haven't reached that point yet. In the industrial sector, I think this is a liquidate everything. You're up to the key moving average. You're up to the Bollinger Band. You're running at the top of it. I'll let somebody else take it. What do you do on it? Now, when I say everything, you let loose a part of your position, at least because you're embedded. You can hold a small portion, but at any point you can fall all the way back here. Just be aware of that. But you have to take money off the table the way that I teach charting. You're overbought in the semiconductor, but they got beaten up badly. Are they going to go back down to those lows? This chart is overbought. It can easily fail just from here, and then you say you had a bear market rally and you're going to slip again. In the home builders, they have come back up. It's amazing to me. I think to you too. All we keep hearing is people aren't buying, they aren't building, and yet here, look at the stock's not acting bad. It's carving something out. It's all sideways action. It's got upward bias, but it's very overbought. And would I want to fight this key moving average? Absolutely not. I'd be on the sidelines now, but I am not in the bear camp. Strange. I am definitely in the bull camp in XLE, and I had traders on this break on Friday. I was telling them to buy in my paid subscriber videos, and today would be a day against the upper Bollinger Band, if you can get there, which you missed by 20 cents, that you want to take money off the table, though. In GLD, my argument has been with every central bank basically raising interest rates, why do you want to own gold? The headwind's too big. You can make 5%, 4.5% on your money without having to speculate on it. I realize everybody thinks the world's going to fall apart. They got to own gold. There's a time and place to own gold. This chart is not saying to own gold. In silver, the market is run into a buzzsaw at the combination of the 100-day average and the 18. It can't get by that. So the market keeps getting thrown back. You're not getting anything really bullish on it yet. You need to see something that says industry can go, and you're not getting that just yet. In the copper market, whatever China does, copper's going to do, and right now it can't be good. So you had an opportunity last week as you got up to the Bollinger Band high along with the 100-day average to do what? If you take my enhanced Bollinger Band course, that was a liquidate if you were long, all long positions. I didn't have a buy signal. I had a lower low, higher high, not a sell nor a buy. In TLT, I remain in the bear camp until there's a reason not to be. Now, if you can get up and over this high, which is 96.69, and close over 97.55, what if I told you that can get a buy signal? But until that happens, I think that the best thing you could do is sit tight, let the FOMC meeting come out, see what it does, and take it from there. In UUP, which is the dollar index, you got down to the spot for the short covering to happen. Again, that's what I teach in the course, and you got your bounce from there. And in FXC, you got up last week to the rally point where to bail on all longs. You weren't embedded again, and away you go. I keep talking about this over and over, the importance to you and I do use the word to you, of understanding how to work with these Bollinger Bands and momentum. It just gives you another dimension to trading, in my opinion. So if you'd like to learn more, watch this. Take the course. I think you'll find it well worth your effort. It is not expensive, and I think you're going to learn a lot. I think you'll be able to employ it in a way that you'll probably be comfortable with. I'm Ira. Have a good day.
Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.